If you're spending too much and you're not bringing in enough revenue, what happens? Well, what Fitch says, in theory, you could default. Now, they're not going to default because that would be disastrous. But I think it means a lot of things for global currencies. I think are going to continue to weaken. Therefore, it actually has implications for Bitcoin, which, remember, Bitcoin doesn't change. One Bitcoin's one Bitcoin. It's just the price that we price it in changes. The asset that we price it in changes. And those are all, I think, going to get worse.
Today, we have Mark Yusko discussing a major turn of events coming to Bitcoin and how the crypto market will be turned upside down in the last few months of the year. Yusko predicts that Bitcoin's market cap will reach $6 trillion, which will bring the price to $300,000 per coin. He also believes that Bitcoin's value will continue to rise exponentially after the halving event of 2024, and gives his timeline and price prediction of when Bitcoin will reach $1 million. Yusko also stresses the importance of Bitcoin as a hedge against inflation and draws attention to how governments' monetary policies have led to the devaluation of fiat currencies over time, impacting the purchasing power of money. In contrast, Bitcoin's limited supply makes it an attractive alternative investment for those seeking to preserve their wealth. Unlike traditional fiat currencies, Bitcoin operates on a decentralized blockchain, making it a unique and superior form of money. The fixed supply, combined with a massive increase in demand, is expected to lead to significant price appreciation, akin to what we've seen with gold. Let's get into the latest interview with Mark Yusko, where he shares his insights on the future price of Bitcoin and how cryptocurrency and the role of money will be completely transformed in the coming months. Don't forget to share your thoughts and comments down below, and leave a like if you enjoy the content we do here.
Probably way back when in history there may have been something, but no, it's not normally seen as an option. Therefore, the idea of downgrading from AAA to AA kind of seems odd. On the other hand, basic supply and demand. The price of those bonds is falling because there's excess supply and limited demand. And if that trend continues, which it appears that it's going to at the rate that our government keeps spending, I think it's not a full-on panic yet, Mike, but it could turn into one. And panics can get ugly in a hurry. Here's a couple things that are happening in Japan. I'm glad you bring Japan up. So if I asked listeners, what's the best performing global market this year? Most people would say the United States, right? Very few would say, well, wait a minute, Europe's outperforming the US, and actually Japan is outperforming both of those. And then emerging markets are a distant fourth. You know, Japan's stocks have been en fuego. I mean, completely en fuego. And part of that's because their return on invested capital has been the same as US companies. Now, their ROE has been much lower because they're not very capital efficient. They keep too much cash on the balance sheet. They don't do M&A. They don't do restructuring. They let bad businesses kind of just go on. Sounds like what we were doing there for a while. And so the only way out for Japan for years has been to weaken their currency. And, you know, if you asked, again, the average person, how's the yen doing this year? I think people would say, oh, I don't know, it's probably flat. No, it's down 9%. And that linkage between devaluing their currency and appreciating stock market has been really strong for Japan. And part and parcel of that was that Japanese rates, particularly the 10-year rate, was kind of capped. There was something called yield curve control. It was managed by this guy, Hiroki Kuroda-san, and he retired. And Crazy Kuroda-san is gone. They got this new guy, and he said that he was going to give up this yield curve control. It looks like a bigger move than it is, but on a percentage basis, it is a gigantic move up in rates. And the real problem is, as bad as the US government budget deficit is, meaning interest on US government debt now is bumping up against the highest level it has ever been.
The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Yusko asserts this journey is just beginning, comparing the initial years to the current widespread interest and investment. With a giant spotlight on Bitcoin ETFs, Yusko highlights this being a significant development in the financial ecosystem. He also suggests that BlackRock, under the guidance of Larry Fink, will lead the charge in obtaining regulatory approval for a Bitcoin ETF. This move, he contends, will underscore Bitcoin's enduring relevance as an asset and its potential as a hedge against currency devaluation.
You think about that.
Yeah.
Well, what does that mean? Well, we can't not pay the interest, right? Or then we default, which is what Fitch and others are making subtle noises about. Well, we can't afford to pay the interest if we issued all the bonds at 0 and now rates are 5 on their way maybe to 6, how do we pay that interest? Well, this is what Japan has faced. And for years, their rates just stayed at 0. They just kept them at 0. And Kyle Bass for years would scream about how these guys had to default and there was no way they could balance the budget. And they hit 100% debt to GDP, then 150%, then 200%. And now they're at 225%, 226 or something like that. That's unfathomable for where we are in the US. It's just over 100, but probably prophetic, probably the way we're headed. All central banks are facing the same problem. And it's a problem of their own creation. And it's, I will argue, an intentional act because governments, as they consolidate power, spend. Why do they do that? Well, because it's profitable for them and their cronies. And, I was amazed. I actually was amazed by this, that I think it was Mitch McConnell actually said on television, don't worry about all this money that's going to Ukraine. It's not going to the Ukrainians. It's going to us. It's going to our companies to, buy bullets and bombs and stuff. So, wow, he just admitted that it's just graft and corruption. So that proclivity to spend isn't going away.
Yusko points out Japan's strategy of keeping the 10-year rate at 0 to stimulate growth. This tactic, while effective, raises concerns about the burgeoning debt-to-GDP ratio, a situation that resonates with similar challenges faced by other economies, including the United States. He also believes the mounting debt and associated risks of default sparks contemplation about the sustainability of current economic strategies being employed. Yusko says the macroeconomic trends on cryptocurrencies, particularly Bitcoin, are setting the stage for the end of 2023 and will lead into the beginning of next year, into the much-anticipated halving. He believes the fluctuating value of Bitcoin actually highlights the weakening of global currencies and the implications for even more crypto adoption. Mark is also concerned about the unchecked government spending, which is paving the way for financial panic, a scenario that will unfold abruptly and chaotically. Mark emphasizes the cumulative effect of these macroeconomic challenges, pointing out the intricate interplay between growth, employment, and inflation. His analysis prompts contemplation on the trajectory of economic recovery and the critical role of central banks in shaping the future financial landscape. What do you think about Mark Yusko's prediction for Bitcoin, and how do you see the last quarter of 2023 playing out in crypto, stocks, as well as the Fed's next move? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.